Marlon Bowling with you, along with Mr. Oliver Sloup in Chicago. Well, he's with the Blue Line Futures Group, and we're going to take a look now at our livestock trade. Cattle market has been under a little bit of pressure today, and that was a little bit counterintuitive when you had the finish that we had on Friday. Let's take a look at our prices here, Oliver. We'll start with live cattle on the August, which I'll add once again as a reminder that's in first notice day delivery mode today. It's down 17 cents at 110.50. Now we have October down 38 at 111.62 and December down 22 at 115.28. Oliver, I heard there was something like, what, 70 deliveries this morning on that nearby August contract. Is that right?
Yeah, I saw something like that come across the wires as well. We're starting to look a little bit further out into October and December as those months start to pick up a little bit more volume. And as you had mentioned, it was nice to see we got a big pop Friday afternoon. I think a lot of that was anticipation of a higher cash trade, which we got. Earlier in the week, we were starting at about 110 on the Fed Cattle Exchange. We got 114 Friday afternoon in the South, which you would have thought would have spilled over into momentum. But I think some of that buying on Friday was that anticipation that we were going to get that higher cash. And so now you're not really seeing that follow through momentum. And I think it's scaring some new buyers from actually stepping in when you can't rally on what would be typically a bullish headline. So we're retreating a little bit, but nonetheless, I think the trend of higher highs and higher lows continues for that October live cattle contract. I think 110.85 is going to be a big barrier to defend on a closing basis. That's a 200-day moving average, and previous resistance now becomes first support. If we close back below that, perhaps we start to consolidate a little bit more. But again, I still like the prospects of higher prices here over the intermediate term.
On the feeder cattle, we did see a lower trade on feeders today. We can take a look at our prices, and I'm going to go out on a limb and say that they are getting a little bit of pressure there from what was a higher corn market, even though it's backed up a little bit. We have September feeders down 60 at 152.43. Is that playing a role here?
I think it certainly is. And the feeders are starting to look a little bit more tired. They were a lot more constructive than fats over the past couple of weeks, but it looks like they're running out a little bit of steam and essentially coming into a little bit more of a range. We were making higher highs and higher lows. Now we've kind of petered out. I think so long as the bears can defend 155 to 156 for that August contract, we could see that test down towards the low end, 150. So you're going to be trading in a little bit of a range until we get a new fundamental catalyst to give us a new direction, whether it be a breakout or a breakdown.